The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Welcome to the Tiger Technicians Hour. Dow's up 53 at 16,871. S&P's up 11 at 1972. Comp Index is up 50 at 4536. You've got gold down 50 cents at 1228. Silver's up 0.05 at 1722. You got platinum up 11 at 1268. Copper's way over the $3 level. It's at 3.08. Up 2.25. Very nice. Let me just have a quick look at the copper, and we'll do these charts in a moment. HG. Whoa, very nice. Bounce right back into the threes. Looks like it wants to tackle 3.10 level. And we're going to follow this really closely because it's very important. So we've got crude oil at 81.19. Woohoo, it's up. It's up a whopping 17 cents. I just heard a short while ago, every penny that oil comes down adds 1.1 billion to the U.S. economy. Isn't that interesting? So it's like a tax cut. And bonds are down 10 seconds at 141 and 21 seconds. I think bonds really, we have to wait until tomorrow afternoon to really understand whether or not we're going to climb back into the try to get to the mid 140s, or they're going to go to the mid 130s. There's going to be a very interesting period that's coming up. And the dollar is at 85.40. Let me just do this because I want to give you the relationship of the DXY right there, which is holding its own, right? MACD is turning down. Stochastic's only at 66 and about to deflect lower. You got to be careful here. There could be one of those patterns that I call the lowercase h formation. But in the meantime, my major thing here is that the weekly chart of the dollar, the MACD, is still very, very strong. So that should give it tremendous support. It's at 85.39 in the index, and I suspect 84.92 to 83.90 is really going to be the big test. If it goes underneath the 83 level in the next 2 weeks, that's going to be a problem for the dollar. I do have it in leg C, a peak C in the Chapman wave methodology, which says it should at some point go to leg D. But remember, I spoke about this a long time ago. I said that the target on the dollar, if it broke certain levels, would then become the 80 it wasn't at 86.42 at the time. I think it was around about 85.80. And I said somewhere around that level, the monthly chart says that would be a target, because since the dollar broke down back in April of 2003, it hasn't even come close to the 200, that goldy brown line that you can see if you're looking at my Tiger Technician Hour charts live on Tiger TV. You will see that it made these arch formations, and now it's made a very nice push above the 9-period exponential moving average, that black line, to go and test for the very first time since 2003 that 200-period exponential moving average. Now, I've got to call this I don't want to. G/A. G is very, very negative. A is really positive. I hate to say, well, if it goes up, it goes up. If it goes down, it goes down. What I am going to say is the way the dollar is acting right now, this 200-period exponential moving average in the monthly chart says that the tide has not yet turned down. It is struggling. It is bumping into the shoreline. How it handles it over the next 2 weeks is going to be very important. And I just discussed what we're looking at in the weekly chart. Now, let me just check on a couple of things. Got that. Yes. Now, what I'm going to do is something that I haven't done for quite a while. I did it before I went away to Sydney, Australia. And look at this. This is, in fact, I'll set this up and I'll ask the question, what do you think this is? Well, if you look closely, you'll see that it is the weekly VIX index. And what I discussed is that if there was a test of the 19 to 21 area, there was a good chance that this time the VIX could spiral a little bit higher. Did I expect that it would go from the 21 resistance area to 31.06? No, I didn't. I did expect it would go higher. We, in fact, had the position. We had the TVIX at one point. So 200% along the VIX index. Got out of it a bit early, still made some nice money. And now look what's happening. It goes right up, and this is so typical of the VIX index. When it gives it up, it just gives it up as if to say, hot stove, get your hand away, and it pulls back very sharply and is cut in half. Exactly. At 15.51 right now, cut exactly in half from the 31.06 level. NACD is still holding quite well in the weekly chart. This is the weekly chart. Now, what I'd spoken of was the cup formation. Remember, I love to look at cycles. I love the chart. I don't go around saying there's going to be a 23-week cycle, or I look at it, and at some point it jumps out at me and says, hey, follow me. I'm a cycle. I'm a U shape or an arch shape, and I keep testing the left side low or high in a certain time frame. And what I said is those cup formations are really important. It isn't how we break above, it's how we hold, and we haven't held. In fact, the entire week that made the high, it closed right on the left side support line, which was at 21.48 high. That came from the week of the 7th of March. Nope. 7th of February of this year at 21.48. And 3 weeks ago, the VIX index, the volatility index, closed at 21.99. So isn't that interesting? So now it's pulling back. It's under the 9-period moving average. Barely started the second day of the week. So I really can't talk about it. But I can say if the VIX index closes on Friday below 15, that'll be a significant pullback and suggest that there's a real good chance that the Dow will go to leg D in the daily chart. This is the questions that I had yesterday and last evening. And what I'm going to do here is just refresh for a second. When I refresh, that's for the questions on email, and questions for the text, and questions in the den. Now what's really important, a good question from the den was, what's the wave count in the Chapman wave methodology of the IYT, which is the iShares Dow Jones Transportation Average Index Fund? Well, the daily, look at this. Now, what I'm going to do this, I hope someone reminds me. I need to do this very often. I look at these charts all the time. So when I'm showing them, I've got the show to do. I'm looking on the corner of my eye. I'm looking at the Tiger TV. Want to see what it looks like. Can you see everything that I'm looking at? But sometimes I forget. I need to open these charts up so that you can see the wave count. You can see the shapes. You can see. Look at the arch formation right there in the IYT from mid-June. It goes all the way up to peak E at 152.40, pulls back, makes a lower low, goes down to 142.47 on the 8th of August, starts a brand new move, and it goes A, B, C, D. Then it suddenly goes E and F. And it goes to 156.28, and it pulls back very sharply. It goes all the way to a trough D. Now, the trough D at 137.05 is below almost all the other troughs. That says that if you go to a new high from this level, you have to count that as a brand new leg to the upside. Well, if this is leg A, and you've got a Chapman wave squash between the MACD and the slow stochastic, there's a really good chance that you're going to have a pullback for a peak A very soon. And then, and this is going to be the real test of this particular methodology. Why? Because if it didn't make a lower low than the low of the 8th of August, the 142.47 level, I could say this is a right arm extension and that this is a continuation of peak F, even though there was time and price involved. But we're going to go to just one more leg. It's what I call the single leg A up phenomenon But this is not the case because we've gone to a lower low. We've gone below the 200-period exponential moving average for 4 sessions, closed above it for 3 out of 4. And then what happened is not only did it spike high, it gapped up, hasn't even gone close to filling the gap, and made a new recovery high today at 156.45. That is 17 cents above the previous all-time high. This, I have no choice but to call this leg A. One of the reasons why we went long after being short the markets all the way from just about the top. In fact, the day before the top in the S&P, day after the top in the Dow, and then I kept going in and out of the Dow, short position. But the S&P, we held the SPX for a fabulous game. And then what happened is I had no choice. When I saw it happen just after I landed in Australia, remember, I was a day ahead. I knew it was happening because it was a day ahead. No, just joking. It was a day ahead, and I looked at it on the 16th, whatever that day was. It was the 16th. Yeah, the 16th, and I said to myself, hey, that was a high-volume climactic low bar. I've got to start covering all the short positions, which is exactly what we did. In fact, it was an ugly intraday morning, if you remember. It didn't start off all that well, and then over the period of the day, it just got better and better and better. I'm looking at the IYT right now. So now let me talk about something else. We've spoken about the VIX. I want to go back to the transportation index in a moment. I just want to show you that the Dow had that terrible IBM day, but look at the SPX.X. This is the S&P 500. It did not have that, so it's had a better gain than the Dow, than the 1826.66 October the 15th low to today's high, 1973.60 as we speak. And I have no choice here again but to call this a leg A, but this has the potential to be a single leg A up that could fail. It has the potential, not saying it will. But the MACD is at 89%. The MACD is very strong. The stochastics at 89%. I have no choice but to grab my up arrow and put it in there. Even though this is just one leg A. Why? It's way above the 9-period moving average, number one. Number two is it's been above the 9-period exponential moving average for 3 out of 5 days. Actually, it's been 5 out of 5 sessions above the 9-period moving averages. Not once has it gone below. Number three, the stochastic went above 80%. Very good. That goes from a buy signal to a potential buy mode. MACD, very wide beta very wide distance between the fast-moving average, that green line, and the red line, and the histogram, that 0% line, is looking great. So I have no choice but to put an up arrow, and that suggests that we should have legs B, C, and D. Whether it goes to a new high or not is not the issue. The issue is we should have 3 higher peaks after we make peak A. I believe that's the case. All right, I'll be back. Basil Chapman, Tiger Traditions out. Dow's at 64. S&P is up 12, double percentage of the Dow. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so I've got the daily chart of the IYT. Very simply put, everything about it looks like it's an A, and I have to put an up arrow in there, right? It's going to take the Fed is just going to have to say the most terrible thing tomorrow to really disappoint this market, to change these patterns that are breaking out to new all-time highs, to reverse them, to take out the low of October the 15th. I mean, that's just real simple. But it's the weekly chart. I'm not going to give a count. It should be a brand new leg A, but I've been looking at this for weeks now, thinking that there was a real good chance that this is what I call an unconventional flat-based restart. How can I explain that? And then I want to go to our first caller. We've got, well, Facebook has the potential for a Chapman Wave unconventional flat-based restart. We are actually long Facebook from quite a lot lower down, and it's acting very well. But I suspect that there could be a spike to the upside to make D. Oh, we've just got D. So we've already got D in the 120-minute chart, leg F in the weekly, E in the monthly, and the daily is in leg B. So that says even if it pulls back here, having made all-time highs at B, it should go higher. So even if it disappoints today and drops 6 or 8 points, it should somehow spring back over a period of a week or two to make new highs. So let's go to our next caller. Our first caller, we got Ernie in Dearborn, Michigan. Ernie, how are you? Good to hear from you.
Did you get any jet lag coming back?
You know, I didn't have jet lag. I thought everything was just great except for one little thing. I didn't sleep last night. So
Oh my God!
it was just one of those nights.
I'll tell you why I'm calling. Can you bring up maybe a 40-year chart on the Dow Jones monthly?
Yeah, I certainly can. Let me get rid of this for 1 second.
Okay.
We'll exit, close workspace, yes to all, come back again with my 1929 versus 2008 chart of the Dow. Here it comes. And Ernie, what is the question?
Okay, now you got a 40-year monthly, is that correct?
I actually have an 80-year monthly, but
okay, whatever. I'm going to give you my scenario, and you may think I'm crazy, but I'm going to relay it to you anyhow.
At this point, Ernie, nobody's crazy. I'm prepared to accept anything.
Okay. In my opinion, there's a 6-year cycle that started 1978 to 84 to 90 to 96 to 02 to 08, and I'm looking for another market low in 15. Okay.
So give me 1 second, because I actually have an even more beautiful chart to put up here. I don't show it very often. If this is the one that this is the one. Okay. This is not fully notated. I've got one that is actually 100% notated. It doesn't matter, because this goes back and it's a white background. And the reason why I wanted to show it, because you mentioned 1974, and that's exactly where this one, I'm just going to give it the parameters that'll make it best to be able to be seen. So automatic, fixed, and here we go. Automatic. That's not fixed. Automatic would give me sub. Okay. Here we go. Here we go. Here we go. There it is. So that's the chart that you want to look at. Now, I want to do something else. I want to place it so that everybody can see. I've got this new monitor, which is this particular one. I added a couple of inches to it, and that's perfect, because I didn't know you were going to call today. But this is perfect. Here we go. I've got exactly what you wanted me to look at. 1974. Okay. Your question. Let me just. Okay, there it is, folks. This is 1974 right there. December of 1975. It goes right back to October of 74. I could go back a little lower, but it goes from the low bar that started peak A, B, C, D in the monthly chart, and a whole series after that. Now, state your case.
Okay, my case still is, and I wasn't using 74, by the way. I was using 78. Every 6 years, 84, 90, 96, 02, 09, and around 15. Now, what I'm trying to get at is, have you ever heard of the term of a megaphone pattern?
Yes. Okay. Megaphone pattern is right here. Let me show you something. Boy, everything's coinciding today. Let me show you something. I'm going to move this away. And what I showed subscribers this morning was, where did that megaphone go? I'm trying to think what chart. I drew it. I can see it in my mind. I have this memory, this perfect memory for charts, but now I can't remember the name of the chart. It is a megaphone, means, folks, that you've got a trend line rising to higher highs. You've got a trend line going lower to lower lows, and it opens up like a symmetrical triangle, but expanding triangle. Great, Ernie. When we get back, we will continue with this, because I want to hear what you have to say. Can you hold on?
Sure.
Great. I will hear from Ernie in Dearborn, Michigan, straight off this, talking about the Dow and the megaphone pattern.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, and we're with Ernie in Dearborn, Michigan. We're talking about the Dow Jones, talking about the megaphone pattern. So, Ernie, I don't know if you can see this. Are you able to see my charts right now?
I am not on your chart at this time. I would just like to tell you that what I would like you to do, if possible, that there's a low at about 98. This is on the low side, 98 and 02. And let's say around 08. You see the lower line?
Yeah, I've already drawn it in, and I've already put it in megaphone pattern.
Okay, now on the upper line, you can see that too. The high there is around 99, and the third high would be about now. The second line doesn't quite touch on a perfect pattern. But if this is correct, what this tells me, because of the width of my cycles and where we are now, we should drop from 17,000, and here comes the insanity, to 6,000 by next year.
So that would mean that you're talking about speed. You're not just talking about the trend line being hit. You're talking about speed as well.
Completing the megaphone pattern all the way down to the lower portion.
Right. Now, I happen to have something that's a little different.
Okay.
I happen to have all the lines you're talking about, plus many more on this particular chart. And this is a chart that I drew out ages ago, and because I gave it to Barron's. Kate Welling was the assistant editor, I believe, at the time, and she was very keen on this. I wrote an article called "The Mega Bull Market Still to Come" with my partner at the time. He was looking more at stocks. I was doing the whole mega thing with the socioeconomic stuff. And
Really?
I found that, and it was such a bullish article. If you know Barron's, bullish articles are taboo. Even to this day, I think they must be taboo. But anyway... Abelson, I think, was the editor at the time.
Yeah.
It was Abelson, and he said, "Nope, no way." So we did the whole thing, and it wasn't ever published. But it was written in 19. I started writing it in 19. When was the crash? 87. I started writing it in 86. Into 87, and when the market on the 19th, when the market crashed, October the 19th, the next day I went online with my service, and I said, within 18 months we should be at all-time highs. One of the things that I've been looking at was there's a cycle, and I wrote this in. In fact, this is a chart that not that many people have seen before, and I called it the approximately 7-year cycle, noticed in 1998. So, what happened after that, I started looking at cycle work. Yeah. And when I think it was somewhere in 87 to 90, I think that's about the period, I started mapping out, but I didn't get to the end. I got mapped out a 7-year cycle that I noticed going back decades and decades. Right. And the first I call the base building was phase 1, 1974 to 1981. The Dow went from 570 to 1,030. Breakout to new levels I called phase 2, 1982 to 1987. Went from 770 to 2746. And you got the crash at peak G in the Dow, a monthly basis. Then I called it a period of recognition, phase 3. That was 1987 to 1994, 7 years. 1616 on the Dow to 4002. Then I called it the ever-rising expectations, phase 4, 1994 to 2000. So I got my sell signal in January, and I thought that the Dow would go much, much higher. In fact, I had the 17 and 19,000s as a target for the Dow, but at that particular time, 2000, the NASDAQ usurped every single penny out there. Even grandmothers who were supposed to stay in the safety of bonds were buying AOL and all those other stocks. Sure. So that usurped every single penny, and then the Qs, the NASDAQ and the semiconductors and the S&P made their high in March. And I remember saying distinctly, the top that we're making in the NASDAQ will be a top that we'll never see again in my lifetime. Well, I hope I live long enough, and I certainly hope that the NASDAQ proves me wrong. I'd love to see it make a new all-time high. However, that was a 90% decline. I mean, that was a heck of a decline, 88 or 92, I can't remember percent. So what happened is, I think that's phase 4, which went to 2000, 1994 to 2000. So that was a year off. It should have been 2001. But then I called it a period of pain, which was pain recovery and then excessivity. So we got the pullback from 2000. It went down to the low of 2002 at 71.97.
I see that. And
then started phase 5. And that phase 5 took us where? To 2007. 2007 is 7 years after the 2000 high. And now we've got another 7-year cycle, and that 7-year cycle says that we should go to 2014. However, I have another measured move, and that measured move is still what I'm saying. I think that we still have a phase to come that is going to take all those players that I played tennis with who got out the market over the last, from 2007, 8, 9,
Yeah, right.
10, 11, they'll be back. I think they will be back. And when they get back in, we've got to be real careful. And I've got I hardly ever talk about this, but you brought it up. I may as well talk about it. I've got a rising wedge formation that says that we should go to somewhere in 2015, and that will be the cycle high. And that corresponds to a number of things. I don't want to get into it right now. It's not the appropriate time because I need to use the time for the market because then it goes into politics, goes into presidents, etc.
Okay.
And I don't think, I'll just give a hint. I don't think that there's a major bear market at this time with President Obama in office. But a little later on, towards the end, like Clinton, you know, nobody ever spoke about the bear market that started in Clinton's presidency. They all said it was Bush. But the fact is, the bear market started with Clinton, but the media never discussed it, ever. They should have said, Clinton is handing a bear market, a bad economy, to the next president, but they never did. So I'll get into that over. There's plenty of time, but you could be right. The megaphone pattern is a potent pattern when it works. Now, one of the problems is
anything else, isn't it? Yeah.
You might have used it up going to phase into the top of phase 5, which was 2007 at 14,198. That's a megaphone. It's actually a very long-term megaphone that goes all the way back. I've got this dashed line. Before you called, I already had the dashed line. It goes back to exactly what you spoke about, the low of 1974.
Yeah,
and
but
that trend line.
See here, I'm shocked what I'm looking at, and I would say anybody that would say we're going to drop from 17,000 to 6,000 by next year is crazy. But if this pattern works, I mean, in this instance, we're going down to 6,000 next year because of my cycle work, and the megaphone should complete its pattern. Now, when I say to myself, how the heck could that possibly happen? That kind of a drop.
No, it's not. You know that it can happen. The issue is how and what would make it happen.
I've got the answer to that.
Okay, let me hear it.
My answer is, and again, it's all guesswork. No one knows why.
You're right. Let's hear it.
This Ebola, we're spending all the money here in the United States. We're trying to keep people calm, et cetera, et cetera, et cetera. But around the world, there's a lot of poor countries that cannot spend the money to stop this. And as you know, the way that this can radiate out and multiply the numbers, you get one person that's got Ebola, gives it to someone else, and then they got 50 or 100 people they got to see that who he's come in contact with.
No one around today, Ernie, knows or knows anyone that was involved in the flu, the epidemic of 1917, which knocked off 20 million people that they could count. I do know someone just the other day who said, "Oh, I lost an uncle in that flu epidemic."
So things can happen, and that's what I've been trying to wrestle with. It seems insane to even talk about this, but the only way that could happen, in my opinion, is if this Ebola thing spreads. And by multiplying the numbers, you got one guy gets it, then
it's exponential. Correct. Yeah.
It can go so rapidly that there's no way of stopping it. I hope that does happen. I hope it's not a silly call, but I thought I would bring it forth.
I've been working on a paper, which I try not to do them for many, many years in between, but I'm starting to work on one. It's trying to put the whole thing together, and it's really about the not even sure I should talk about it, but it is about the attack on capitalism. That's really what it is.
How do you get the time to do all these things, Basil? How do you get the time?
Well, you sit on a plane for 13 hours, you get the...
You put down a crossword and do other things, yeah.
So, Ernie, I don't think you could be right. Obviously, you could be right.
I don't want to be right,
I don't want to be right either about my pessimistic forecast after the mega bull market is finished. But at this particular point, it's his time to start piecing all these things together. Just be ready. That's all. You've got to be ready. So
Absolutely.
I appreciate your call. I appreciate the megaphone pattern. I got it all drawn in here. People can see it, and I'm going to keep it in there. I'm going to make it a little fainter because at this point, we don't want to be looking down. We still want to be looking up. And
Absolutely.
in the meantime, back at the ranch, thank you so much for calling. Always enjoy hearing from you, Ernie. And don't
Okay,
forget,
Basil. Thank you.
don't forget, there was a couple of years, maybe 6 years ago, something like that, we spoke about oil eventually going down to the single digits again. Remember that?
I do.
And I think that we might be starting that move. I don't think this is it, but we could be starting that move towards the mega trend of oil dissipating. We'll see. So thanks so much, Ernie, and always great to hear from you.
Ta-ta.
Thank you. So we got Ernie, and now we've got Mike in Thailand. He's not on the phone, and he asked, when is Yellen going to be speaking again? Now there's a question. Doesn't she come out? There's a Fed announcement today. You know, I never keep up with that stuff. In fact, I found that while I was in Australia, without any news, without anything, just doing my work at the wrong time. I did it. In fact, as the market closed, I already did most of my work. It was 7 in the morning there. It was 4 o'clock here. I loved it. I could just think so clearly. Now I'm back listening to all these things, to CNBC, Bloomberg, and all that stuff. I must get back to avoiding it. But next press Yellen conference, not until December the 16th or so. Thank you, Z in the Den. So that's your answer, Mike. Now, let's go to a couple of things that I want to do before the break comes up. Just as we're going to the break, I want to show you something that I think at this particular point is really worth noting, and it's very important. I'm going to do this one more time. I'm going to show you the weekly chart. I'll try to clean this up as much as I can. You're actually looking at the Facebook chart. There was a question in the den about Facebook. This is leg F in the weekly chart, and we're bumping up very strong resistance area between here and what depends which week it is. If it's this week, it's between here and 82.40. That would be it would break out above 82.40, and the monthly chart is in leg E. So, could this be, what's the question? Sweden, okay, here we go. Well, there was a question here. Can that be leg B? Question is could this leg, what be leg B? In the weekly chart, no, this can either be F or A. Now, I want to talk about this because if you go to TRAN, that's the transportation index. You see, let's just look at this without any Chapman wave notation whatsoever. You see that the high that was made, remember I did the Groucho Marx eyebrows, but you remember that 8714 high the week of the 19th of September, pulls back. That's the deepest pullback that transports have had in ages. Goes to 7,700. 7,700, I've already forgotten the number. 7,700 from 87, it's 1,000 points. That's 11% or something, 11, 12%. Hey, look what happens. It now breaks out in 2 bars. It just zips right back. It's even quicker than it came down. The MACD hasn't crossed positive. Stochastic's still only at 53%. The next week and a half, let's call it 2 weeks. The next 2 weeks from this Friday, the following 2 weeks going into November, it's going to be so important. Why? Because a close below 8,300 in the transportation index will say, whatever the count is, it looks like a failure pattern. That is a close below 8,300, right there, 8,300, right there, where the arrow is. At any point, we'll say, that's like a right arm extension or a rogue wave. Be careful. But if there's a pullback, and the pullback is just mild next week, and there's no new high, but it makes a peak, and that 9-period moving average at 84.29 holds, and then the following week you go to a new high, we're going higher. We're just going higher for many weeks, because that'll be leg 3. But then there's another technique that I want to talk about right here, and that's the unconventional Chapman wave Fed-based restart. We'll be back straight after this break, and the Dow's up 51, and the S&P's still up 10.5. Nice action in the S&P.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, Chad Coco will be up next with the Options Hour, brought to you by Think or Swim. Don't forget, great show. Stay tuned because this is a perfect time to be looking at those options. Now, I had a bunch of questions. Now, so Bob's question was, do monthly SPX, that's the S&P or Dow charts, recycle to get new peaks after a letter F? And absolutely. quickly. Sometimes what happens is the recycle doesn't really go to G. You got to go back and see that what happened was there was a recycle. I'll show some examples, but let me just be very precise. Yes, it can recycle, but very often, especially in monthly charts, you've got to find that it's probably a B or a C in a brand new buy mode. And there was an elision, as we call it in music, an overlap as you get in a Bach melody where the one part, the counterpoint overtakes the other one. That's the kind of thing that happens. I'll try to answer maybe more on Friday in my technical program where we go a little bit more into detail on the technicals of the Chapman wave methodology, and I'll try to find some examples, or at least by Friday. And the next question, so the answer is yes. Sarah asked TNX and TLT, so let me just get rid of this as I'm talking. Let me show you something else. It's even more important. Yes, I'll show that in a moment. And then another question, Julie asked, SPX, do you have a year-end target? Are we close to a top? We were close to a top, but because the volatility index went so quickly and so powerfully into the 30 area, we might have to wait a little while before we build up enough negativity to start a brand new move to go back towards the 20s. So as I see it right now, we usurped a tremendous amount of energy. If the IBB goes to all-time highs, which it's done, which we're actually long for my subscribers, 20% gain or something, I think, so far. It was 18 yesterday and it's up again today. If that is a very important component, if it makes all-time highs and a couple of the other indices go to all-time highs and the transports just go to new all-time highs, I have to think that a chunk of the selling has been completed and that we have to wait a little longer. So now that I've answered that, let me show you. This is for my subscribers to my opening call. This is what I did this morning, if I can find it, right there. So this is a chart of UNP, which is Union Pacific. A long time ago, I don't even remember when it was, something stuck in my head, just like that 32-period exponential moving average that was recommended once, and I've used it now. I find that I kind of like it. It was recommended that I must follow Union Pacific. Why? Because Union Pacific and the S&P correlate incredibly well. So I've always kept that in mind. But I used many other technical tools, and I would forget now and again. Then I'd check it out, and yep, UNP, the S&P. And then I thought last night, you know what? I'm going to do an overlay, because it's all very well in the back of your head. I want to do something like say Dave White would do, or Steve Rhodes. I wanted to get the preciseness. So I did that, and I got the preciseness, and what did it demonstrate to me? That in trend, very often Union Pacific either led or the S&P led, but they kind of went together in unison in trends. But the depth of the trend, the depth of or the length of any pullbacks, those things do not correlate. And you can see there's a great correlation right now, but in fact, I keep saying United. It's Union Pacific has gone to all-time highs, and the S&P is following, but it had that big dip in the monthly chart, and Union Pacific doesn't show that. So the preciseness, there's the SPY underneath it. That's the SPY I've got there, which correlates to the S&P very well. So the general trend's fine, but the preciseness is not. Now, I just want you to grab this if I can. Hope I've got the right one right there. No, it's not. There it is. This is what I showed subscribers this morning as well. There are the three yields, the 30 years, 10 years, and 5 years. I'll talk about it for tomorrow, but it's a good question, and I'll talk about it because it's very important, the low that was made. Stay tuned for the Options Hour, and I'll be back with Tom later.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.